Hello everyone and welcome to my morning report chart analysis videos on Thursday 3rd of May with me, Rich Market Analyst at Hantec Markets. We've got a bit of a dollar correction that's undergoing today. We had the FOMC meeting last night and subsequently we've seen the dollar just dripping back a bit. The FOMC was more confident, certainly, but also started talking about the fact that inflation was towards target, and it was sort of used the word symmetrical, which would suggest the path of inflation was sort of probably going to be allowed to run a little bit hot potentially, and that so that sort of hit rate expectations a little bit going forward for this year, and sort of the prospect of a fourth rate hike this year may not necessarily come true. So subsequently we've seen Treasury was just sort of consolidating a touch, 29775 I noted just before the FOMC announcement, so it's just below that at the moment on the 10-year yield. 2-year yields also a bit lower, and subsequently what we've seen is the dollar dipping back, but I don't think this is going to be a move that sort of changes the path of that dollar strength. Ultimately I still see the Fed is the only hiking bank in town now, and that should help to ensure that we still see further dollar strength, and I think that markets will be focusing on average hourly earnings tomorrow. If they increase, then I think that would be, again, giving the dollar another sort of boost to the upside. But at the moment, what we have got is this corrective move across the majors, where the dollar is slightly lower. Similar move again on gold as well, about 0.5% higher on gold, $6 up on the day. Similar sort of moves that we're seeing to these forex moves as well. Now we've also got a bit of a slight correction on equity markets. The DAX 0.3% lower. The S&P 500 closed 0.7% lower, but the S&P 500 futures are sort of mildly higher. So sort of balancing out a little bit of a corrective move, but nothing too significant on these European markets. So services PMIs are today, and the UK had its services PMI disappointing again, 52.8. So it showed a mild rebound from 51.7 last month. That was an 18-month low. And 52.8 is not a great number. According to Market, which is a data firm, they were expecting, or the run rate of Q2 GDP for the UK is now around about 0.2%, so barely growing still on growth this year. Now, into the afternoon, we've got the US data, and the ISM non-manufacturing PMI is at 3 o'clock and expected to just dip slightly to 58.1. So still very strong though, isn't it? So that will be a driver of the dollar this afternoon. So my chart of the day. Oh no, sorry. Eurozone Flash CPI. I can't believe I forgot that. Eurozone Flash CPI is at 10 o'clock, so that's not too far away, and it's expected on the headline to just dip slightly to 1.3. Maintain at 1.3. That's the flash reading from last month. The final reading was slightly downwardly revised to 1.3, and then the headline. And then the core, at 0.9, which is slightly down from 1% last flash reading, and then I think the core was also downwardly revised to 0.9. So core at 0.9%. Reuters data. Wish they would change that, but anyway. Okay, so my chart say Euro Kiwi. Now, what we have seen in Euro Kiwi is this bull run that we saw through late April is now being reversed, and we're seeing lower highs, lower lows. You saw that bearish key one day reversal last week, creating a high at 72.56. Then we've seen a lower high on the 30th, which was Monday, and the market is sort of falling away. So lower highs, low lows, forming a downtrend. Momentum indicators, look at that, stochastic sell signal near term. RSI falling away, MACD lines sort of rolling over. It looks like it's sort of playing a bit of a role within the fib levels of this move. So 23.6% had been a basis of consolidation, but then breaking to the downside, that now becomes a basis of resistance. The 71 sort of 20 area basis of resistance. But it certainly looks as though it's further retracing. So 38.2% fib is 70.30. 50% fib is 69.60 on this, and it looks like the market is now retracing and forming lower highs, lower lows. You can see that on the hourly chart where this old uptrend has been broken. We're now forming a new downtrend Momentum indicators negatively configured on the RSI, failing around 60. MACD lines as well, sort of into negative territory, and it looks like this is now a market that is in correction mode. So yeah, I would expect further retracement in due course. So with that in mind, I wish you good luck in your trading, and I will speak to you later.